friends, and welcome back to Market Shares. I'm your host, Tony Blodgett, and today I have a repeat guest, and we're going to have, I think, a very exciting conversation about a segment that is both mortgage and real estate related. So I think all mortgage and real estate people will relate to this conversation. But I got back with me Kathy Helberg-Strick, and Kathy, welcome back to Market Shares. Good to see you.
Thank you. Thanks for having me back.
Well, Kathy, if you remember last time you were here, we were talking about the NAR, the settlement and the lawsuit, and all of the inner workings of what was going on with that. As we kind of kick off this conversation, I'm just curious in your mind, because I've spoke about it a number of times here on the podcast. Did the impact to the industry end up being what you expected? Or because it feels to me like there are changes, there are new disclosures, but it's still a lot of business as usual. Are you seeing that? Just real quick before we jump into this other topic, I'm curious.
Actually, we were just discussing this at a team meeting today, and ironically, there was a lot of fear that was encompassed around this change and this lawsuit. But in reality, it hasn't really changed much of how the industry acts today. We were discussing amongst our group how many times since the lawsuit has changed the commission rules that any of our personal experience that a seller has not opted to cover the buyer agency side commission, and not one agent in the room had a seller that opted not to. So that's, kind of interesting. But in our opinion, it has actually made it a little better for us as the realtor. I do like the transparency. It really kind of put some parameters on buyers, because for years it's been the wild, wild west of buyers would just run agents around with zero commitment, kind of like they do with loan officers. A lot of times, right? There's no commitment. And so, a lot of agents spun their wheels and put a lot of time and money into showing property and never had anything to show from it. So I'd say the biggest impact that this had is on the buyers when we were expecting it to be on the sellers. And it's having buyers have to make a decision and commit to an agent up front, some sort of agreement. It's not necessarily a percentage or a certain amount of time, but some sort of an agreement as to how an agent may or may not be getting paid for the services that they're rendering.
Yeah.
So that to me is change. And quite frankly, I think commission rates have maybe stabilized or gone up, because oftentimes the buyer agent, not oftentimes, the way it was is the listing agent and the seller set the buyer agent's rate at that listing appointment. And so that's all I was able to make, is whatever the MLS said I was able to make. Now I set my rate with my buyer. And if the seller pays it, the seller doesn't pay it, ultimately it goes back to the buyer if I want to hold them to my agreement. So we're able to take a little bit more control of what our worth is when we enter into contracts with buyers, because agents frankly weren't entering into contracts with buyers because they didn't have to.
Yeah.
So that's the change, I think, that was unexpected, that came out of the NAR settlement. That's been a positive thing.
Well, I appreciate you covering that, because, it was such a big topic for a long time. And I think just to revisit kind of the implications, and it is very interesting to me that, it now protects buyer's agents with, kind of the certainty that they never really had, that if they're spending their time investing with this buyer, that they're going to get compensated for it if they ultimately buy a house. And it's also kind of interesting that the sellers, almost every time, it sounds like, are willing to contribute towards that expense, as they historically always did. So it just means to me that the way the marketplace was operating, although had less transparency, was probably about right? Otherwise, we would have seen a bigger change.
I do like the fact that the seller has the ability to say no if they want to. They just see it's in their best interest not to. So they're not being forced. They have that transparency. And they're not having to set an amount up front. So you can look at what your terms are and then decide if you're okay with paying that commission. And there's some times that we've negotiated it, but there's never been a time that I've had a seller yet say, not paying it at all.
Right. Well, and I think that if market conditions were to change and it became highly competitive and multiple offers, that might become a negotiating point in the transaction. But, we'll see. Maybe next time we have you back, we can get an update on where we're at. All right, well, cool. Well, the topic I want to talk to you about today is something that you and I have actually worked with quite a bit. So it's this idea of real estate agents getting their mortgage license. And I will say that this really did accelerate kind of during the same time. We had been working on it well before that, but it felt like it accelerated and became more of an issue, mostly because, interestingly enough, I think buyers agents were concerned that there would be a much more significant squeeze on compensation. So I think the general public, and when I say general public, I mean most mortgage and real estate professionals, think that real estate agents getting their mortgage license is really geared around this idea of earning more compensation. But the conversations you and I have had is that there's so much more to it than the compensation aspect, right? I mean, there's lots of other benefits. And I want to talk through this with you because we have a program at New American Funding that allows real estate agents to become licensed. We call it our REALS program. You've been very integral in helping us you participate in the program as a real estate agent, and a number of the agents that you work with participate in the program, but also you've been intricate in helping us to craft, the right way to not only build the structure, but also how it's represented in the marketplace. And so I think this is a very timely conversation as we hear about, and we're not the only lender that does this, obviously. There's some very large lenders that do this and others that are, considering this as an option. So I think it's a very relevant conversation, but it's the framing around this concept that I think is a little bit skewed in the marketplace. And I think you have some great perspective to bring to that topic that I think everyone in the audience would probably appreciate. So that's what we're going to dig into for the remainder of this conversation. I'll kick it over to you, Kathy, just on your general thoughts on my opening there.
Sure. Yeah, it was very important to me, when my husband's a loan officer. I'm a real estate agent of 28 years, a broker owner. I've owned real estate franchises, big box models. I've been a part of all of this affiliated services and things. So when we started kind of talking about how to create a model that wasn't about the money first, because I get heartburn as a real estate broker and a team lead to make sure that everything that we're doing is consumer focused. If it's consumer focused first, and then, oh yeah, there's extra money in it, great. But if it's all about the money grab, that feels icky, right? So I wanted to make sure that when we're talking about a dual license model, that we check the boxes of compliance, number one, because ultimately the real estate transaction feeds, it's the spoke to everything else. Okay, so we got to keep that whole, we can't jeopardize that. So transparency, making sure everything is compliant was important. And then also making sure that it's right for the customer and the agent, which translates not only to additional income, but also holding some of your deals into the transaction that were falling apart before. So that alone generates you additional income, even without a dual license model. Just being able to have more control of the process and more input in the process makes you more money because you keep some deals together. So those were all the components for me that went into this, because we're the producer, we're the director, and we have this fiduciary duty to our client. And if you think about it this way, I kind of feel like separating the two is a little antiquated anymore, because we are putting people into legally binding contracts. We're making obligations. We're agreeing to certain dates and deadlines. And there's lots of contractual contingencies that tend to kind of overlap in the sales contract that the loan officer doesn't completely understand a sales contract. They might not even completely understand the complexity of even just the financing portion. And vice versa, the real estate agent doesn't understand all the complexities that a loan officer is dealing with in trying to get the loan going. So to me, there's this big lead curtain in between those two that has caused so much angst over the years between the relationship of the loan side and what's happening on the real estate side. My perspective as the agent, and you can give me a different perspective if you want, or you have one, but that what happens on the loan side, there's no obligation. Like we go into it with a customer of, give me your information, give me your taxes, like I got to collect all your documents. And then if everything you tell me comes out like we think it's going to, everything's going to be fine. But we don't know for sure. So there's no obligation there for you to make this loan to the customer. We in turn are taking customers and we're taking their word for it, a piece of paper that we've seen time and time again wasn't worth the paper it was printed on. We're putting them into legally binding contracts and saying, we hope the money's going to be here in the end. In the meantime, you're affecting people's lives with their plans, their travels, their down payments. Like there's so much that can go up in smoke when a deal doesn't come through. And for an agent, that's always been the rub. Like it's really hard for us to do our job and do it effectively, which is kind of like landing the plane when we don't know if there's fire in the engines that are going on because it's behind the privacy curtain. And to me, my light bulb went off when we started talking about dual license of like, man, that could solve so many of the problems and keep so many of the deals on track and repair that relationship that isn't really completely symbiotic going on with the timeframes of what happened with processing a loan versus what we have to do in the contract. If we could blend that a little better and make that a better transaction for the customer, still get them a great company, still get them the best rates. They have options. They don't have to do this program. But if we could have our hand on it to help save the potential of putting them in liabilities way of potentially missing some deadlines, losing earnest money, or God forsaken being sued for non-performance, doesn't that make a lot more sense to try to touch the two together? So that's kind of where this was born.
Yeah, no, I agree 100%. And you are right in that it's always been that the lender is obligated to make a good faith effort, right? That's why originally it was a good faith estimate, assuming all goes as planned, like these are the terms under which we can lend to you. But you're right. I mean, there isn't that same, I would say that mortgage originators do have a fiduciary responsibility for putting their clients into transactions that are in their best interest. But as far as, being obligated to close that loan, you're right. It is different than the liability, I would say, that a real estate agent might be under. And I think that this program absolutely aligns the licensed real estate agent who gets their mortgage originator license. They are now part of the origination team, right? And let's just kind of back up a little bit about how we have this set up, because I can't really speak to other organizations and what they do, although I believe it's similar. But the way that we structure this is that we have a real estate agent, and we typically want someone who's an active full-time agent, doing a number of transactions a year, right? Like they're actively full-time engaged in the business of buying and selling real estate. They need to go through the process of getting their MLO license. So they become fully licensed. And we do have a wonderful team who helps them, guide them through that process. That is something unique that I feel like we do that others probably don't do, at least not to the degree that we do it. But we will guide them through that process. Now, once they are licensed, they are then partnered with one of our full-time mortgage originators. And so there is a partnership, and they are sharing in the compensation that would be generated by that transaction. And the real estate agent who's licensed, they are actually the loan officer. They're originating the loan. It's in their name. And then they're working with a loan officer that's part of the New American Funding team that's in one of the branches here. And once the loan gets started and they work with the customer and it's disclosed, obviously, that they're involved, and I mean their name's on the paperwork, so everyone knows what's going on. But that loan officer then really takes that ball and runs with it as far as taking it through what you would consider the traditional gamut of getting a mortgage loan from the origination stage, from application through to closing. The difference being is that now the real estate agent who's licensed now has this inside peek into what's going on all throughout the process. And that, I think, is what you're alluding to, is the major game changer here, because they get to be involved. They get to be notified. They get to be updated. They're in real time, not just being updated by their lender, like they're the lender, but they also have a full-time job. And so they have minimum things that they have to do in order to compliantly be compensated for that loan. But everything beyond that is still handled in a traditional way that a loan would. Now, some loan officers, their initial reaction is, I don't want my agents to know about this program because, I'm going to have to share my compensation. Like, I'm going to get this referral anyways. I'm going to update them and do a great job, but I'm going to lose part of my compensation. And what we've seen actually happen is that the chances that you're getting every referral possible from that agent are actually quite low. Most real estate agents will work with different lenders, or they just simply don't push their lender in a way that could potentially disrupt, what their buyer's looking for. They don't want to just get involved. They don't want to, but to your point, I think that when you can say, look, I really want you to consider this process, and here's why. Not because this lender's got the lower rate or all those things. I mean, hopefully you're partnering with a lender that has good rates and all those things, but because I'm actively involved and I can fulfill my commitments and obligations to you in a way that I otherwise couldn't if you chose a different lender. So let's speak to that. I mean, is that aligned with your thought process, Kathy?
Yeah, that's exactly how I present it to my clients, is that this is a better way to keep me a little more in the driver's seat of what's happening with, whether the cash is coming through or not. Because at this point, the way we normally do it, we're kind of flying blind. And sometimes we get updates that are in time with some of our deadlines in the contract. Hopefully the loan officer is at least honoring, the finance contingency. But what people don't understand is, I've been doing this for 28 years. I've had more than enough deals blow up on the financing side than I would like to say I've been experienced. But the common denominator always was, a lot of the times it was kept from me as the agent until the 11th hour. Rightfully so, there's privacy laws, but as agents, we don't understand that. It doesn't compute. We think we should be hearing this information. So that gets oftentimes blamed on the loan officer for not updating us. But also, there's things that they're waiting to tell us to the end, because everybody's hustling trying to fix it. Right? I was trying to find a solution before they have to come and tell us the bad news. But unfortunately, as much as that seems like they're trying to save us, it's also handicapping us and blindfolding us, because, like I said, there's other contingencies going on that are not related to the loan, that had we had enough information moving forward about some potential issues, we might have been able to make some pivots under the guise of some of the other contingencies, right? Not just the finance contingency. So it's all strategy that the agent has to know the moving parts for us to be able to pivot, to be able to save our buyer from a potential bad situation. And when we're not getting that transparency and that real-time information, we don't get the opportunity to be able to act early enough sometimes. And a lot of times, there's things with lending that requires last minute reauthorizations and things like that that is after the finance contingency is gone. And there's times that it blows up then, and agents are like furious of, why is this just now? Why are we hearing this from underwriting? It's a week after the finance contingency is gone, and there's never really great answers to that. And so, to me, when we're seeing the real-time information coming through, We're not begging for that information that we can only get crumbs of legally. Like, we're privy to all that information and we can be part of the solution in a time frame that's more manageable to save our clients from some potential risk and liability that we go into, and our own reputations. When deals fall apart at the end, it doesn't matter whose fault it was. The dirt's on us too. Like, the other agent's mad, the seller's mad, the seller, the buyer's mad, everybody's mad, and we're part of this mad transaction that we had nothing to do with, because we're thinking we're just merry all down the line and we got our loan, we got our loan contingency gone and something blows up. So all that just causes the animosity between the two silos. And so I always call it the lead curtain. By dropping the lead curtain between the two, I don't need to be completely involved. I don't want to go on the loan side and do every single aspect of that, right? I still want to focus my agents on the real estate side, but I want to do the compliant pieces that keep me into the transparency phase, that I can see as much as I want to see, ask as many questions that I want to ask, and get as many answers as I need to get that are all legal and compliant. That makes for a tighter, better transaction for the consumer. It makes a better transaction for the agent. And then our relationship with our loan partner gets deeper and deeper and deeper, because we start building this synergy together and we learn each other's ways and the things, and that comes over time and with volume. And a lot of times we never get there with a loan officer, because you do a few deals, it was okay, and then something blows up, and then you throw that guy out and you go get her, and you do another loan officer, and we've never really committed like a true partnership. And that's another thing that I think this program really helps us do, is go deeper and deeper and work better together with your loan partner to be able to really trust each other and not have these turf wars or finger pointing. There's so much finger pointing when something is going sideways. The lender should have done that, and they should. Everybody starts throwing each other under the bus, and that doesn't help anything. So to me, this program really just kind of puts a bow around all of that and just allows us to serve the client's highest needs and best needs, and that is to get them to the closing table, not to not perform on a contract that they're legally liable to perform on. That's my biggest fear as a broker and as an agent, is to have my client make a mistake or do something that comes back that puts them in harm's way.
Yeah, so many loan officers call their real estate agents their referral partners or their partners, but they're not truly partnered with them. I mean, to your point, this is truly a partnership. I mean, you have a partner loan officer, you're sharing in the compensation, you have completely aligned mutual goals, and deepening that relationship over time is absolutely one of those goals. And so I really do like that. I would also think, Kathy, that just simply a real estate agent going through the process of getting their mortgage license is probably going to help them a lot better understand what's really going on behind that lead curtain on the lending side once they go through that, 20-hour, I think it's 20 hours of continuing education, or, pre-licensing education that they have to take. And then there is some continuing education. Depends on the state that you're in. Typically it's 8 hours. Some states have 1 or 2 or 3 additional hours per individual state. And that's annual. All of us, that are licensed, myself included, need to do that. But don't you think that's a big aspect here, is just simply going through that experience? They learn a lot about it, and I think a lot of respect for it. And then also, when you answer this, give me an idea of how that process has been, because you've worked with a lot of agents who've gone through this licensing process, and I'm curious your feedback on how that's gone for them. Like, how difficult is this really to do? Some people are very afraid to go through that. What's the success rate look like of people that actually put the time in and study and do it? And just anecdotally, like, what's the feedback you hear from people about that process?
So first of all, let me just tell you, I thought I knew a lot more about lending 20 something years into the business than I did. No, once I took those 20 hours, my eyes were opened on some things that I made assumptions about as a real estate agent. And I think that's true across the board. So it definitely maybe go back and revisit the times, like I said, that you're pointing fingers and thinking it was the loan officer that did a poor job or whatever, when in reality, even the information that we were getting told that we felt like was subpar was more than we were even entitled to. So those were kind of some eye-opening things that have changed. And I had one broker owner actually go through the program, and she called us back and goes, "Yeah, I owe a lot of loan officers some apologies right now after I finish this 20 hours." So it definitely is very educational, no matter how much you think you know, until you've gone through the actual pre-course education, you don't know it all. So it does make you a better real estate agent because it's given you more clarity, and it gives you sometimes we dance around that whole financing thing because we don't really know. And agents that have been in the business more than a year or two, they don't ever want to ask a dumb question and feel like they're uneducated. So a lot of times they'll just circle the question instead of answering it. And to me, this gave me a lot more clarity. It gives you more value proposition to your buyers to say, listen, I'm licensed in both. And then when I tell my people, I went and got my mortgage license for the sake of being a better real estate agent and bulletproofing our deals a little more, not just because I want to go be a loan officer. That's a different career path. But I added this type of license to my toolbox because it makes me a better agent for you. And ultimately, I'm the guy in charge of the whole process, but I'm locked out of this part of it. And this part of it is such a big piece, right? And when I explain that to them, their light bulbs go. They're like, that makes total sense. Like they love the idea. They don't want to have to go think about all these different choices. There's so many things going on for them as a seller and buyer. A lot of times they're doing both. That any type of thing you can do to ease their tension, it's better. And then you talked about the process itself for agents. Again, going back to my experience of being a broker, being a team leader, being a mentor, a coach of agents, I know the downfalls for agents, and we tend to chase shiny things and not get anything to completion when you're chasing multiple shiny things. So I didn't want dual license opportunity, the Reals opportunity, to be another shiny thing that requires some work because they do have to put the 20 hours in. And I've seen too many people start and stop things and not get over the hump. So that would cause a lot of frustration. I didn't want this to be something that is a frustrating thing for agents. I wanted it to feel empowering and educational by going through the process. But to do that, I knew we had to build an accountability system and help system for them because we've got so many other things going on that if we hit any resistance at all, the agents are going to squirrel. And so I knew this just from my own background of training agents. So that's why, Tony, we did build an internal kind of teaching system with our girl Jamie, who's amazing. We hold the agent's hand from the second they say they're interested. Jamie jumps in, connects them, gets them going where they need to go to sign up in the NMLS. She gets them the study materials. We give them information on where they need to study, what type of courses. Like, we make sure it's so easy that they don't have to make all these decisions and make mistakes. Because I know when I first signed up for it, we hadn't added Jamie yet. And I signed up for the wrong class. And I thought I could do it on certain days and I couldn't. So then I was like, I just spent money on something and now I can't show up for those days. That's frustrating. I can see losing some agents and people getting mad about that. So we added Jamie to say, listen, we're going to take you from A to Z and get you to pass the test because that's the biggest pain point, getting them through the 20 hours and pass the test. And that's what we did. And I can say, at least as of this week, our pass rate with our agents is 97%. And the average is 50. So the average first time pass rate is 50. I'm sorry, it's 92%. We're 92% on our pass rate with our agents first time because we hold their hand and get them through the right information and even help them study. So I think that's super important because a lot of people will jump into this thinking, oh, great, let's just do it. And then they won't finish if we left them to themselves. And we've seen that with other companies that have tried to do dual licensing, just like, oh yeah, go get your license and come back and see us. They failed because the agent squirrels off and doesn't finish the course.
Yeah. So let's add some clarity. So Jamie, who's phenomenal, by the way. So she's an employee here at New American Funding. You and your husband, Steve, kind of brought the concept of this idea. You work at eXp Realty. You're a team lead. You're a broker. But you're also an employee here at New American Funding, right? You're a licensed originator at New American Funding, and Jamie's part of our team here at New American as well. And there's a few people in this department that really came over when Steve originally joined us. Steve's like a branch manager, regional, for us. And when he joined, you joined afterwards, and we've kind of started building out this program. So I think it's important for people to understand the concept that, the real estate agent, the dual agent, the reals, what we call real, the dual agent, real estate agent is an employee also of New American Funding. This is where they're licensed. They're a W-2'd employee and get compensated just like one of our standard loan officers would on these transactions. That's an important thing to understand. And it's our team that partners with them to help them, point them in the right direction on how do you get signed up for the classes that you need to take? How do you, take the test? What are the best study guides, so on and so forth, like really holding your hand. And for all of us, it's also tracking, right? Because we have loan officers all the time who might, meet an agent who's interested in doing this. And, you guys are in St. Louis, right? But we do this, all around the country. So we might have a real estate agent who hears about, this dual licensing, hears that New American Funding offers this, and they want to get involved in the process. They too would work with the Reels team, which is Jamie, and work through that process. So I just want to clarify that it's the same for everybody all across the country. It's just that Kathy is kind of one of the pioneer, I would say the pioneer on the real estate side here at New American Funding with helping us develop and mature and grow this Reels platform.
Absolutely.
Did I say all that right, Kathy?
You did. That's perfect. Yes. Yeah, it was important. It was important to me to come at this from the perspective of the real estate agent, because it's hard to do that when you've never been a real estate agent, and I've seen other companies try to build a program like this just from the mindset of the mortgage company and the lender. And it was always falling short because of some of these issues that I know as a broker owner, team leader in my past, that agents struggle with. And so we tried to make sure that we checked all those boxes with our program. And I think that our success and our growth is showing that it's working. And, there's agents that are passing their test every single week, getting into this program and getting ramped up. And then going back to what you said earlier too, Tony, about some loan officers originally, kind of might rub them. I'm like, oh, I got to share some of my income. We have stats that show there are some of our loan officers that were already working with the company. They were already, have a great loan officer relationship, but one of them was even like their very close friend, right? So once they got into the Reels program personally, we can go back and track the amount of business increase that real estate agent has been converting for that loan officer is probably quadrupled. And so the small thinking is, oh, I got to give up a little bit to the agent. But the right thinking is the big picture is that your conversion is going to skyrocket. Your at-bats are way higher, and the agent is more vested in making sure that the buyer understands the advantages of using themselves and the loan partner as their choice because of these other things that are involved in the real estate transaction. If you're just left to, hey, here's my friend, here's a card, whatever, that's pretty much the amount of push that they're giving you, because there's not necessarily a whole lot more into it for the agent to really invest themselves into explaining why the consumer should consider you. But with this program, it really levels it up. And so I can have a way more empowering conversation to say why it's so important to use my loan partners, Lauren, why use myself and Lauren, because I get to be involved now and I'm going to protect you with these ways over here.
Yeah, 100%. So let's talk about some of the criticisms, if you will, not of this program in particular, but just the concept, right? So, you know, I'm sure you are too on social media. I'm in plenty of real estate and mortgage kind of groups, if you will, and I've seen dual licensing come up, and some people really. And I have my answer to this, so I'm curious yours. A lot of people really shun the idea because they're like, look, the reality is that being a real estate agent is a full-time job, and being a loan officer is a full-time job. So, you know, stay in your lane, right? Why would you try to, you know, do both? You're not going to do both very well. Like all of this kind of speak around this. And I want to get your take on that because you've talked to so many real estate agents about this, and I wouldn't be surprised if some people kind of gave you initially that as a reason why they're not interested. It's like, look, I work hard enough doing what I'm doing now. Like, I don't need to do mortgages as well. I'm not looking to be a loan officer, etc. And I think you and I both know that that's not really the point here. And that's what we're trying to illustrate on this conversation. But what are your thoughts on how do you address that major objection, or even just that thought process, which I think a lot of mortgage and real estate people both hold that thought process today and don't even want to look at the concept as a result of that?
100%. We used to get a lot of pushback in the very beginning, and I think it's because the dual license has been around for a very long time. Like California has been, people hold their license in both for as long as I can remember, like running across agents that did both. But, you know, the difference is they full time or like a broker or something in mortgage, and then they also do a little real estate. And it is a little bit different because there's a lot more time commitment. And I think the pushback and the rub sometimes with the agent side is that how can you be excellent at both? Right. And I knew that coming in too. We wanted to keep our reals, which real stands for real estate loan specialist, just so you know, I don't think we hit that earlier. We want to keep them in the lane of real estate, but still be compliant with what we need to do on the side of the loan side to have zero speculation that we're operating in compliance. And so we have built this program to make sure we do check off the levels of compliance that we need to do as the real estate loan specialist before we bring in our loan partner that helps do a lot of the heavy duty, time consuming things, right? So the two working together create all the boxes of compliance that need to be checked without really muddling down the agent in what full time, like processing and all of that they would need to do. It's divided, the work is divided by the two parties, which makes it a lot easier of a burden for the agent to do what the agent needs to do on the loan side and still operate as a full functioning real estate agent.
Right. And I mean, the reality is that a loan officer's job is to source their leads, right? Well, in this case, the real estate agent is sourcing the lead. They already have the lead. They have the lead every time. So they're marking that box. But that's not enough in and of itself, right? When you speak about the compliance, they have to take an application for that borrower. So when we're compensating a licensed MLO, mortgage loan originator, that's the license they hold. So there is origination activity that they need to do, all of which they probably have a lot of that information already because they need it in order to do an intake form on the real estate side as well, right? So a lot of what they're doing is just information they would have already. There's a few other things that they need to do, but the reality is it's not a full-time job. Now, there is some additional work, but it's also work that I would argue brings you closer to your client, has you better understand their financial situation, which you are representing them in this transaction. So to have that knowledge definitely empowers you as their real estate agent. And when it comes to the heavy lifting of the next 30 days of escrow, all the follow-up and, the appraisal and all this stuff that has to happen, that's being handled by your loan partner, who is internal working in one of our branches. And so my argument, I guess,
seeing all that in real time. We don't even have to call that loan officer and say, "Hey, did you order the appraisal? Hey, did this come?" Like, we see it. Like, it's amazing to be able to have all that transparency just right there in our fingertips, that we're not even sweating because we're seeing the process unfold.
Yeah. And I guess my point is, if someone says, "Oh, well, look, those are both full-time jobs and I'm not interested in doing those," I would say, then you clearly don't understand the program. You don't understand what the opportunity here is and the other benefits to it, not just to make you a better agent, better informed, but to your point earlier, Kathy, which I think is the key to everything that we do as mortgage or real estate professionals, is we're serving our clients better in that we can help them understand the process. That's the other thing. Like, keep in mind, some loan officers speak very loan officer-y, right? They're just maybe not, they don't have the same relationship. I mean, how would they? Think about how much time an agent spends with a buyer looking at, 12 houses over, multiple different weekends. I mean, they have a deep relationship. So for them to be able to legally and compliantly confer with their client about what's going on with their mortgage transaction, like, how does that not bring value to the situation? I mean,
100%. And dual licensing isn't necessarily about making more money. Like, to me, that's like the cherry on top. It's really about reducing the risk of your client losing money or being in harm's way with liability. Like, that is the crux of it for me. And then, oh yeah, we get to be compensated as well. So I just think, now that I've done it this way, to me, it feels archaic to go backwards and have it be so separated, because it really is truly flying the plane with a blindfold on as the agent, and there's just so much responsibility that's put on us. And we all have PTSD of it feeling like a deal blew up and the loan officer is kind of like, "Yeah, sorry, man, like, we tried everything. We just didn't know that they had this going on." And I was like, "Sorry." And they just kind of bow out. And we're
right.
left hyperventilating with, "Oh my gosh, there is so much that we've got to deal with now that is not pleasant." And so this fixes that to me. It's just a superior way of doing business.
Yeah, and I think we should speak back to, I think a lot of people still think that there's rules around dual licensing. And I'll tell you, as you mentioned, California has had a dual license, structure for a very long time. I will say that it wasn't explicit, but there was definitely some concerns on government loans, FHA loans. HUD had some rules around, who could be compensated on a transaction. And so on agency loans, this wasn't an issue. So for years, you could be dual licensed and you could be the agent and the loan officer on the same transaction, but it couldn't be an FHA loan. They wouldn't allow it to be a government insured loan. All that changed and this is really what opened up where you saw a lot of growth in this model. I believe it was December of 2021 was when the mortgagee letter came out that clarified the parties that could be compensated legally. Well, in HUD's opinion, could legally be compensated on a loan and which ones were a conflict. So for instance, an underwriter being compensated on the loan is still a conflict, right? Because they have a direct, they have a direct line to whether or not that loan gets approved. But the real estate agent in that mortgagee letter was excluded from that. And that's really when the floodgates open for people to say, look, we can have licensed real estate agents as mortgage professionals and they can be the real estate agent on the transaction and the lender on the same transaction. And it's not a problem with HUD. It's not a problem with all these other things. Now, doesn't mean there's zero compliance around this. And we've spoke about that ad nauseum on this. There's definitely compliance and things you need to do. And we make sure that we check all those boxes. But I just wanted to point that out because I still think there's people, and I've heard people say this recently, that they still think that it's like it's some sort of a, iffy kind of a thing. And it's definitely not. Now, not every lender wants to do it. Not every lender decides to be involved that closely with the mortgage and real estate side of it. But I think if you do it smart and you do it right and you have policies and procedures and structure around this, you can absolutely do this in a way that is, I believe, can be a potentially huge benefit for the loan officers to help them grow their relationships in their business. Definitely a benefit for the agents for all the reasons we've spoke about here today, and benefit the customers who choose to work with an agent that is involved in both because of all the reasons we spoke about today. So, I mean, when you can check all three of those major boxes, I think this is something that not only has legs, but is worth everyone's consideration.
I found it was almost a knee-jerk reaction of agents that just wanted to shut change down. Like they immediately, oh no, it's conflict of interest. It's not RESPA compliant, like all these things. And when we get into conversation of why do you think it's a conflict of interest? Then we started breaking down the walls that they really didn't have a good reason why, other than assumptions that were being made. And one of them that's out there is that, well, surely we must be charging the consumer more to be able to cut in another party, right? That's an assumption immediately made. So it must be costing the consumer more to pay the agent. Not true, because we already talked about that, and it comes out of the compensation of the other loan partner as well. So it's shared compensation. It's not increasing margins to be able to afford this, right? And then there was, the pushback of, like you said, well, you can't be good at both. And so we solved that problem as well by partnering instead of, the one person trying to be the jack of all trades, because we definitely didn't want to go down that road either. And like I said, we've seen huge success, but we've seen brokerages change their policy, because that was another pushback that we got in the very beginning phases, is some of the brokerages themselves had their policies against their agents having dual license. And we saw a 180 with a lot of the big brokerages that removed that. When the mortgagee letter came out and made the government loans okay, it kind of like gave the stamp of approval. And the president of the Mortgage Association even came out and spoke to dual license model and said he thought it was the future. So that just really lit this on fire. And we've really been able to shut down some of that old-fashioned thinking when we can get in front of people and really break down what is the fear behind it? Like, what is the misconceptions behind it? Because that's really what it is. And then what was I going to say about well, I'll come back to it. There was something else that I thought was really important as far as just, I know what it was. The brokerages that are doing the 180s on it. You're seeing brokerages now partner with different people to do dual licensing models. But then when they get to us and they see how we've perfected it because of the agent rub on it, that we've really made it agent centric, we're seeing these brokerages jump and peel away from some of the companies that they started down the path of dual licensing with, and jump on board with us at New American Funding because of the agent-centric piece of it, and how we've been able to hold the agents' hands and bring them into the model and make sure they're educated and moving forward, and even giving them masterminds on having topical conversations on compliance. I think it's a more compliant model, quite frankly, because I know how agents have been receiving items of value for years and getting leads paid for and getting ball tickets and all things. Do you think that agent discloses that to the client when they give that card out? Absolutely not. They're not. So to me, this is a way more compliant, because that's a broker pushback sometimes, is they don't want the extra liability. And I argue this is relieving some of your liability because we're disclosing this up front, that I, as the agent, am involved, and I'm involved because of these reasons, and it's all disclosed. Whereas your agents are out there running around doing God knows what and getting God knows what from their people, and they're not being disclosed. And we're seeing some of that stuff come back and be bitten in lawsuits right now with people that had services, multiple services. So we can argue those points all day long, and we've got them covered because we know those are some of the traditional thoughts against dual license that doesn't hold water anymore.
Yeah. Well, no, absolutely. I mean, the simple fact that there's lenders sitting in real estate offices for a number of different reasons, right? It could be because they're paying for a desk rental. Not that these things aren't compliant. I mean, they can be done compliantly or not compliantly, but let's assume they're compliant, and they're doing a desk rental or they have an MSA agreement or whatever the case may be. But to your point, no one's disclosing to that buyer why they're using that loan officer. And there is, albeit compliant compensation typically going to the managing broker in that particular case, but it could be used to offset and support the agents in the branch. So I'm not saying it's not doing that, but you're right. It's definitely not most likely disclosed to the buyer in the same way that this sort of a relationship absolutely is. So look, Kathy, I think this has been a fantastic conversation around this because there's still misconceptions, and I think it's gaining steam. Well, there's no question. It is absolutely gaining steam. And to me, like anything else, you got to understand it. Like, this might not be for everybody. Like, let's be honest. If you want to be in the Reels program, you got to get your mortgage license, right? You got to do the 20 clock hours. It's not a simple test. I think that there's preparation you can do to really increase your chances of that going smoothly. There is some level of involvement with your buyers, although I would argue the amount of time you guys, especially buyers agents, spend with their buyers is a lot already. I don't think it's a lot compared to what you're already doing. And I think there are things that bring you closer to your client and bring more value to that relationship. So it's not for everybody, but you should at least understand it. And on the loan officer side, if you're afraid of it, I think that you mentioned it. You said small thinking. Like, there is a small way to think about this, and then there is an abundant way to think about this. And I have done a couple interviews with people who are really taking the abundant side here and are showing how significantly they've grown, not just their partnerships with individual agents, but the other agents that have referred them to this program, and that whole network is growing in a way that never would have had the catalyst to do that without something like the Reels program to really ignite that fire.
Right. And the agents that are utilizing it are excited. They're excited about it. They're excited about sharing it with their friends. And we're really just the tip of the iceberg right now. So I think you're going to see explosive growth in 2026.
Awesome. Well, Kathy, thanks for coming on Market Shares again and breaking down and having this conversation with me, breaking down the details of it. I think that it's super important, and we'll just have to keep talking about it because, this does evolve and it's growing in the marketplace. If you have questions or want more information on this, you can reach out to me. You can put something in the comments down below. You can reach out directly to myself or Kathy with any questions that you might have. Look, guys, if you know agents or lenders, look, even if you don't agree with this, like you're like, I don't know how I feel about this, share it with a real estate agent, get their feedback. I'm curious. Let's start a discussion around this topic, and let us know in the comments what you think. And of course, if you want more episodes like this one here on Market Shares, we put out a new one every single Friday at 10 a.m. for you to enjoy. So please subscribe so you don't miss the next one. And Kathy, we'll have you back at some point in the future. Thank you so much. Everybody else, take care.